If you've watched Australian investing videos, you've probably heard this advice. Just buy VAS and VGS. That's all you'll ever need. It's one of the most popular ETF strategies in Australia, but is it actually the best strategy for everyone? In the next 5 minutes, I'll explain what VAS and VGS really own, the hidden risks many investors overlook, and whether this portfolio is right for you. VAS is Vanguard's Australian Shares Index ETF. It tracks around 300 of Australia's largest listed companies, including Commonwealth Bank, BHP, CSL, and Woolworths. VGS is Vanguard's International Shares ETF. It invests in approximately 1,400 companies across developed markets with major holdings like Apple, Microsoft, Nvidia, Amazon, and Alphabet. Together, these two ETFs give you exposure to thousands of companies around the world while keeping investment costs very low. That's why so many Australian investors use this simple two-fund portfolio. The biggest advantage is simplicity. Instead of trying to pick winning stocks, you're investing in entire markets. Management fees are low, diversification is broad, and you can build wealth through regular investing over many years. For long-term investors, it's a disciplined strategy that removes emotion from investing. But here's what many videos don't tell you. First, this portfolio is invested entirely in shares. If the market falls 30 or 40%, your portfolio could fall just as much. That's especially important if you're close to retirement. A major downturn at the wrong time can seriously impact your retirement savings. Second, there's concentration risk. Although VGS owns over 1,000 companies, about 75% of its value is invested in the United States. VAS is also concentrated with a large portion invested in Australian banks and mining companies. Finally, this portfolio doesn't include emerging markets, smaller companies, or defensive assets like bonds and cash. So while it's diversified, it's not diversified across every asset class. The biggest mistake investors make is focusing on the ETF before their financial strategy. Before investing, ask yourself, do you have an emergency fund? Should you pay off expensive debt first? Are you saving for a house deposit? Would extra super contributions give you valuable tax benefits? Sometimes improving your financial position delivers a better outcome than simply buying another ETF. VAS and VGS are excellent ETFs and can be a fantastic foundation for long-term investing. But remember, a great ETF doesn't automatically mean it's the right strategy for your situation. Always consider your age, income, debt, tax position, and financial goals before investing. If you found this video helpful, please like, subscribe, and let me know in the comments. Do you invest in VAS and VGS, or have you chosen a different ETF strategy? Thanks for watching, and I'll see you in the next video.